Happy Friday, Pat.
Hey, Rick, how you doing, buddy?
Oh man, it's been one of those days.
Yeah,
What
I hear you.
Well, there we go. Yeah, up showing homes yesterday up in Sun City West, as you know, and you helped me write that offer. So now our fingers are crossed. Maybe we'll get lucky like last time with that Gilbert home where we found out when I was online. So we can we'll talk about the over 55 markets a bit today too. So
Yep.
but here's where we are, my friend. Do you want to guess what our inventory number is?
4,105.
4,617.
Okay, I was off by 5. Wow.
Yeah, that's Friday, so it does it. But we had 3,909 come on, 4,017 gobble
Yep.
them up. So no change. It's
Same voice.
it's the year of the buyer beatdown. That's just what I'm going to call it from now on. It's just so damn frustrating. You keep waiting for it to change, and we're seeing some of this from the Cromford people that that red line, the buyer demand is coming down, but I'm not seeing it when I'm out there showing homes. I called on a home that was listed yesterday. They had 29 showings yesterday.
Yeah.
And she said that she's telling the seller they wanted to keep it available for showing all weekend, Saturday and Sunday. And she's begging the seller, take it off the market Sunday morning, please. She goes, my phone won't stop ringing nonstop. And you've got inventory continues to go down every week, and the buyer demand. This number here. I don't think this is rate driven, Pat.
No,
I think this is just fatigue.
Yeah, it is. I'm starting to see it on my end. Talking to different LOs, and I think buyers are just getting fatigued. Just getting beaten up. Like you said, the good thing is with markets, nothing ever lasts forever.
No.
Yeah, I mean, you look at rates. Our rates are starting to move. Obviously, the last 30 to 40 days since the end of December. But that was for 6 months from April through December. The rates were, low, mid to high 2s, and now they're low 3s. I think that's and people are going to be if rates. I think the Fed, they opened up their mouth last week and they weren't as tough. They didn't, I don't think the markets liked what they said because they said they're letting inflation run. But we also got inflation is going to heat up here next couple of months. But I think the policy of the policies are coming out. I think there's going to be that initial surge with the COVID, but then I think you're going to see things taper back down again, like you and I talked about.
I don't think the economy is that strong to where it's just going to take off like a rocket. I really don't. I mean, I think when we look at our numbers this year compared to last year when everything was shut down, of course it's going to look good. And but I mean, we're not out of the woods by any stretch of the imagination. So it's it's going to be so that should help keep the bond market from collapsing and rates going up. And then last week you talked to me about Fannie Mae and Freddie Mac to that they were telling lenders not to have more than 7% loans being non-owner occupied. So like that would be rentals and vacation rentals and second homes, right? Yeah.
It's really kind of weird. They came out with this. They're Fannie Mae and Freddie Mac said basically, we hope to see. I can send you a picture. St. Pat, I was paid St. Patrick for the day. I should have come out with the St. Patrick uniform today.
Yeah,
but they basically said they're going to limit second homes and investment properties to 7% of a lender's portfolio. So what's really strange is that some lenders are not doing. They're doing it very sporadically. Some lenders are only putting a 1/4 point hit on, 1/2 point hit. Some are putting a 2 or 3. If some lenders if they're at max capacity, they're putting like a 5 point hit on their pricing. So it really, if you're buying an investment home or second home, it depends what lender you go to. I still have this one lender that UWM that has not priced out second home and investment properties yet because they're pretty big. So they've got some capacity to go before they go to 7%. But I think a lot of these lenders now are saying if we're at capacity, we're going to price it out so we don't get second homes and investments.
Well, I was doing some reading, and one of the theories out there is that they're seeing some numbers, and they may be looking at this as a way to keep the investors and the Airbnb people from gobbling up the already dismal inventory.
It's their indirect way of tightening up the market. Basically.
Yeah.
Because I mean, I've never really seen, I haven't heard this, and I can't remember when I've seen Fannie Mae say, hey, you can't only have so much percentage of certain loans in your portfolio.
Yeah.
So it's very sporadic. It depends who you go to from a lender, get financing through. Because like I said, I just went through the rates. I went through my pricing sifter this morning. Some had a 1/4 point hit, some had a 1/2 point hit, some had a point hit, some had a 2-point hit. So basically, they're obviously regulating the loans. They see something behind there. As I mentioned last week, I think there's something behind that of why they're doing that.
Yeah. Yeah, there's a lot of theories, but one of the things I touched on this week, I don't think you saw it yet, Pat, but how much do I write the offer? What are people getting per price range? And so I thought this was great. Pulled it up in the Cromford report. So in the 300 to 400,000 range, and now look at it, see whenever I'm online, I want to go to one city. So I'm going to go to Chandler, and it sits here and cooks for a minute. Doesn't do it. It only does it when I'm trying to go live. So now I'm going to hit on this. So, the Cromford report found a new word. You got hot, hotter, frenzied, and then insanity. And so the whole East Valley is insane. And so from 300 to 400,000, it says here 68.6% of the homes are getting more than their asking price. That was like 48% last month. So what is the average amount that they go over? 300 to 400,000 is $16,000. That's the average. So if you're not playing in that 20 to 25 range, ready to go over on a $300,000 to $400,000 house, you're not very competitive, and it's sad. But then here's what I looked at, because this is what my shopping was telling me when I was out in these over 55 communities. They're not insanity. And if you're from out of town and you're thinking of selling and relocating and retiring in Arizona, you are not going to get into bidding wars. It's not happening. So in the $300,000 to $400,000 range, there's half of what you just saw in Chandler. 32% of the houses are being outbid.
Interesting.
And look at the dollar amount. The dollar amount's like $5,500.
But does that go to the demographics too? Because if I'm just not to be, break up different people in different parts, obviously segregate people. But I think the older generation doesn't want to deal with the circus. They probably tell their agent, listen, I want to list it for $375. If we get something that's a little bit over, I don't want to deal. You get the, They don't want to deal with that circus. They don't want to deal with that.
I call the agents and say, besides prices or anything else that the seller is looking for. And yesterday he's gone, no, just gets his asking price. He's good.
Yeah.
But if you're from out of state and you're looking at all of these real estate numbers and it's frantic and it's insane, it's not if you're looking to live in an over 55 community. And there's some great ones. The one we sold in Trilogy, that we bought out there, got it for the asking price.
Yeah.
The bid we put in today was for the asking price.
Well,
I'm pretty sure we're going to get it. And there's some beautiful communities out there.
Oh yeah, there are. It goes back to, I think a lot of people, if you read one headline, you're going to run with that headline and say, oh my God, you're going to have everybody say, I heard, Phoenix is just crazy. They're just going to throw the baby out with the bathwater and say everything's crazy. Yeah, it's segmented. You got to have an agent that knows what's, like yourself, that takes the time to, break down. You just can't go with the just general statement, say everything's crazy.
Well, that's happening right now with rates too, right? You still see articles saying rates skyrocketed, but you had Wednesday, you said it went up 78 basis points in the morning, but then it recovered.
Yeah, it was down. It was the MBS price was down 78 bips, 78 to 80 bips. And then all of a sudden it recovered, to down 20. It was all over the board. The last couple of days, we've had some shocks to the interest rates. Interest rates have jumped up, from the high 2s to low 3s, nothing crazy. But I've been watching rates. I mean, since I'm not, we tried the sharing of the screens, but I don't know if I can share.
Well, right now it's just showing your laptop screen. You can share windows.
Okay.
You can have
me.
open up on another window. So,
I mean, yeah, I'm only on one. When I have my 5 computer screens at my home, at the house, I can manipulate stuff. That's why I've got 5 computer screens. When I get one laptop,
makes it easy.
Rates have jumped up, but they've been on a tear since beginning of, not tear. You see that once again, I'm sensationalizing stuff too. I mean, they've gone up from the high 2s, 2 7/8, 2 3/4, 2 7/8, up to 3, 3 1/8, 3 1/4. And, it's a big move from a bond standpoint, but I think the Feds know that if they get out of hand, they're saying that the 10-year Treasury goes to 2% here, who knows when, but I think they'll do something, to do the Operation Twist, sell short-term bonds and buy long-term, short-term bills and buy long-term bonds. They could do some certain stuff because they know they can't let this get out of hand either, because you got, like I said, the 10 years gone from 90 basis points to 174. That's over a 70% move in a month, which is that's a big move. So nothing goes straight up and straight down, so. But I think another thing I'm running into now is, I was talking to another loan officer at the office here today. People, he's quoting. He goes, yeah. He's quoting a rate because we're a broker and I can compete with anybody. For the most, there's very few people I can't compete with. But he had a client. He was telling me just the other couple of hours ago. He's like, yeah, he quoted 3 1/8 or 3 1/4. On a loan, which was pretty much kind of the going rate. And the client's like, I'm going to shop around because I saw rates at 2 5/8. Well, he's looking at news he's 2, 3, 4 weeks ago.
I still get emails. Rates are at record lows.
Yeah.
I mean, every week from one of the big guys.
2 weeks behind.
Yeah, 2.1.
Yeah. So now we go in. We always have about a 2. What I found out with the average public, we always have about a 1 to 3 week lag from them really getting the news of what really rates are doing.
Well, that's interesting because they had that discussion on the Mortgage News Daily on the delay from, what is it? Fannie Mae does an average. They do a survey. So it's on Monday. They do a survey on Monday, everybody, and they go, here's the average rates. Well, by the time the rates went up all week on Friday, their average summary is nowhere near what actually happened.
And see that, the person, lag. The people are doing the rate shot. They look at the rate snapshot. There's a rate, I can't think of what the name is, the Fannie Mae snap. If you looked at the Fannie Mae snapshot, your rates would probably be 2 3/4, 2 7/8 when they're really 3 1/8, 3 1/4.
Yeah. That's what. Let's see. I think the article was, watch out for fake mortgage rate news. Yeah. So it says here. Let's see. Over time, reporters have found it easy to simply cover mortgage rates once a week when Freddie's report comes out, rather than go for multiple rate quotes. So they show it down here. See, the blue line is the survey that they did on Monday. Mm-hmm. And here's actual by the end of the week.
Yep.
It happened here too.
You always get, when you get these gaps like this, you get people that they don't believe you. You're like, well, I'm going to check around because you're quoting 3 1/8. And I heard, last week or 2 weeks ago that the rates are, it's like, no, I mean, I'm the real-time news.
Yeah. My Aunt Sally, who talked to her cousin Fred, said he saw in a postcard that showed up that he could get a 1.5 fixed for 30 years.
Once again, it's always always the case.
I get that. So it's dangerous territory where the Fed's at, because he did make a statement where he said, look, we'll give you plenty of notice when we're going to begin to taper. Well, that's the day he says we're going to taper next year is the day everything goes to hell.
Oh, yeah.
So I don't know how I'm not a smart guy like he is, so I don't know how he's going to pull it off. I don't know how he's going to be able to say, at the end or the middle of 2023, we're going to begin to stop buying bonds. Nobody's going to sit back and say, okay, well, we'll wait till, first quarter 2023.
Yeah.
It's going to bust loose right then. And then they've got to backtrack. And if they have to backtrack to keep the bond market from, collapsing, then when will they be able to ever do that? So
I think they're kind of stuck in a pickle. Is there a way to see how many purchase mortgages are for monthly?
Yeah, how many mortgages are there primary versus second investment homes?
I don't have those numbers.
I did a search today just on Airbnb, and I said I just went like April Scottsdale, and I came up with 600. And so it's kind of thinking, but it pulled up condos too. So, but there's 600 rentals out there in one city. I did hear a statistic or saw a statistic early in the year that said our investor-owned homes are running about 23%.
Yeah, but a lot of those, that's 23% investor-owned, but how many of those pay cash for them? Right?
Yeah. So they bought them all in 2011, 2012. So that's a tough number to find. We don't have access to that.
Yeah. I saw the forbearances. The forbearances, they actually, in regards to the forbearances, they saw the largest decline. I don't know if you saw that or not, but it was the largest decline since early January. Because basically there's like 600,000. They said that let me see here. Give me the news here. That I'm trying to pull up the number of loans in forbearance experienced the largest weekly decline since early January, as hundreds of thousands that are due to expire at the end of March. They said that at the beginning of the month, there were 1.2 million homeowners with plans due to expire at the end of March, and 620,000 of those remained. So half of them got out of forbearance. Yeah,
and then we've talked often how that's going to be a great big nothing burger when it's over. I don't know what's going to happen when the rental moratoriums go, but I don't think that's going to affect inventory much or home prices at all. So I'm not sure where that's going to land. I'm discouraged by. I'm kind of encouraged, but discouraged by. I'm actually glad to see that buyer traffic is starting to back off, but it hasn't even gone down to where it was in February or even January of this year. So I mean, it's buyer activity was way up. So while it's coming down, it's got a long way to go to affect the frenzied markets or the insanity markets. And I still can't believe that inventory is not coming up.
Yeah, I think you still got to segment. You still got to segment those buyers, though. Segment A, segment B, and segment A being that first-time home buyer that is trying to do the dump, FHA, or trying to do, maybe they've got a little bit extra cash to go over offer, but they're like, I'm out. But then you get this segment of buyers that sold a home, they've got money, they want to buy, they're willing to go 25,000 over the, off 30,000 over the offer.
Yeah, but it's virtually impossible to get anybody to accept a contingency offer these days.
Yeah.
Unless you're really close to closing, you've already passed inspection, you've already gotten your appraisal, and nobody else has come in with a sweet cash offer. Appraisal just kind of sits out there in la la land, and we'll look at it as a backup. It's tough. And then if you're selling a home and you're going out to make an offer because you don't want that gap between when your house closes and when you move, you want to shorten that as much as you can. Sometimes you get in a situation where you've got a contingency on top of a contingency. So I sold my house to you, Pat, but then somebody bought your house and now your house is on a contingency.
Yeah. I mean, it's called
double
roundabout circus. I mean, if you got contingent A, B, C, house A, B, C, this house is contingent on this one selling, this one, that really gets to be a racket.
Yeah. And I had one fall out on me once, temporarily, and then they got another offer and stuff. But the agent didn't even let me know that the offer that they sent us, it was a contingency, but he failed to let me know, it was in California, that he also had a contingency on his place. So when this fell out, I'm like, well, what do you mean? You never even said you have to disclose this stuff.
Yeah.
And I'm interviewing Jeb Smith. He's a broker with Coldwell Banker out of Huntington Beach on Tuesday morning. And I'm going to ask him how they're doing it out there, because Arizona's right now very vocal about blaming all of our price increases 100% on California. And while we do have a lot of Californians coming out here, I mean, my latest ones were from Denver, Seattle, Chicago, Texas, and California. What's that?
Virginia.
And what soon to be West Virginia. Yeah. So, you know, real estate prices are going up in the entire country. That can't be all fueled by California, but I'm more curious. I want to know who's buying the California homes, and entry level. How are they getting in? What do you consider entry level pricing in Southern California? And how do they get in?
I don't know.
Yeah. What are they doing? I'm really looking forward to that one. And on Friday, we have our anniversary special, 1 year anniversary. I don't know what to wear, Pat. So I think I'll just stick with the stupid hat. But 1 year after we started this, and I have clips. I have clips from the very first time that we went live on YouTube. And we just clicked the live button and we use Zoom. And there's a delay between when you click, go live, and then for it to show up on YouTube. So you end up thinking you're not live. So you're going like this. You're going, I don't know. I can't tell if we're on. Well, can you tell? And then we had microphone problems. And so, we got over it. We learned it.
We've come a long way, baby.
Yeah. Well, it's going to be fun to look back, and it's going to be fun to look back at some of the things that, like the beginning of forbearance, what our opinions were when forbearance came out, because there were problems.
Yeah. Yeah.
There were some big problems. So we're giving away 3 webcams. So if you haven't found that video on my channel, just go to my channel, scroll down, look at the one that's got Pat and I. It's got a big webcam on it. Just subscribe, like, and comment, and you're entered in the contest. And we're going to have the drawing, and we're going to announce the winners next Friday.
Yeah.
So you don't have to be present to win, but we're going to put it up there, and you're going to have to let us know how to get a hold of you. So you're going to have to send me an email. If I say, Pat, you just won, you're going to have to send me your emails, and so I can communicate with you to get your address, so I can mail you the camera.
Your information will not be used for marketing purposes.
No, that's clearly not going to happen. So we're not out trying.
I want to give a jump in here. I want to tell you about that story that, just a quick story about, I told you the thing I've been working on the last day. I just got a call from a Wednesday night. Keep this real short, but I'm going to bring this story up because it's important. Communication, all the agents are busy and communicate. Lenders are busy, and it does pay. Nobody's perfect. I'm not perfect. Nobody. We're all human, but it just goes to show you communication, and it just kind of like I've made mistakes in the lending business. I don't sit here and say I'm perfect, but I try to root out the red flags, and I say, hey, there might be something here, but I always say that real estate is it's negotiable, and guidelines on my end are guidelines. They're not rules. So guidelines, you can kind of, provide something else to overcome the underwriter, what they're asking for. But on Wednesday, I got a call St. Patty's Day from this other agent, and he said, hey, I might have a rescue loan for you. They're at, I don't know if I should say, Navy Fed, and they were supposed to close this Monday. And he said, we got a problem. They won't, their income is too high. I said, what's their debt to income ratio? There was 53%. And I told them right then and there, I said, I can guarantee I can know what their issue is. They have a hard stop at 50% debt to income ratio. And he goes, well, let me find out what I said, we'll have the client call me. So Thursday he called me. He goes, yep, you were exactly right. Navy Fed does not go over. They capped their debt to income ratio on VA loans at 50%. So what's sad is they knew about this 30 days prior. And the lady, I feel bad for them. People make mistakes, and the Navy, the supervisor said, yeah, you should have known about this a couple of weeks ago. So I was, it stinks, but scrambled around, got the loan into underwriting today, and I should have an answer by Monday. And she said, if you take this to any other bank, you'll get this approved. So my point being is communication is important. If something does go wrong, because if things do go wrong, you can typically fix them. I can't ever think of anything that I really have to think really hard and long if there's anything that I never was able to overcome. Because you can always work around something, but it's sad that they didn't communicate. They communicated this the day they were supposed to get the CD, the closing disclosure out.
Oh, man. So they went dark until the 3 days before closing.
Yeah. And then, it's important to know, what institution, because a lot of people go to some of the bigger banks and, they're not as mobile, they're not as fluid, and mobile as far as moving and talking. I was talking to a client, last night at 8:30 at night, so it does pay. I mean, on top of it, the LO, this is what kills me. I hate to throw anybody underneath the bus, but God, this just blows me away. The client, the LO called the realtor, the buying agent, and said, yeah, here's our situation. Not much we can do. She goes, I'm going to be on vacation till Monday, so there'll be somebody around here to help you out.
Meanwhile, people were packing and going, do we stop packing? For our viewers to know how the process works, if you can't get your loan, we have to notify the seller 3 days before closing. Well, that's just way too late. So that's why you need to know the status of the loan every week. And that's why it's required to send out what's called an LSU, a loan status update. But even that's not enough. You just have to be talking to the lender all the time. Any potential hiccups? Do you see anything that might get in the way? How solid does this look? What's underwriting telling you? Because there's nothing worse than delivering that bad news to a seller's agent 3 days before closing. Because they're going to turn their electricity off. They got everything in boxes. It's devastating. It's harder on both sides because guess what? The buyer packed too. So you're all living in boxes now while you try and fix the problem. So it's just really important.
Yeah, especially in this type of time frame, man. You got to get locked in, and with it's just I feel bad for that, but it looks like we can get the deal done. I mean, but I talked to the list. I got on the phone with the listing agent today with the buying agent, and which I pride myself on, because there's a lot of lenders that won't talk to the listing agent. They're afraid to, but anyway, thought I'd throw that in there.
Well, and I appreciate you calling mine today. So
yeah.
So we're going to ink that deal. It's going to be fun. Well, look, everybody, I'll be back here on Monday, show up again on Tuesday. And don't forget to come out here and see us next week for our party. And don't forget to smash that like button.